Welcome to the panel on VC This. I was just saying welcome to day 5 and congratulating Steve on the buzz and excitement he's created on Blockchain Week. And I'm very grateful to be here with a fabulous panel today. And the way I like to start the panel is actually to get them to introduce themselves. So can you introduce yourselves and your VC company and maybe one or two of the investments you've made in the space?
Thanks so much for that. I'm an investor at Aura Ventures, and so we've made a few investments across Southeast Asia and Australia. In Australia, we've made an investment into a private blockchain company called Ligon, and in Southeast Asia, we've made an investment into ZipMex. Our founders are also quite big angel investors in the space, so have invested in a few guilds and a number of other different projects.
Thanks. So I'm Jeff. So most people know me as the former CEO of Binance Australia. In fact, this is the building that we built the exchange from scratch. I run an asset management company called Monochrome. That's not the talk of today. Many people may not know that I also run a ventures arm of my own called Cortec Ventures. So some of the deals that we did over the last 12 months was Macari, which is a tier 1 Australian market license holder. That's the investment from Digital Currency Group and those guys alike. I also, maybe I'll skip 2. So another one is a Brisbane PropTech company called Spec. They're ex-Colliers and ex-WeWork people that are revolutionizing the sort of commercial leasing space, and a couple other blockchain stuff as well. So that's me.
Hey guys, I'm Abby. I work as an investor at Folklore Ventures, where we look to invest early and for the long term. We've currently made one direct investment into an Aussie-based company called Crypto Tax Calculator, and looking to make more. In addition to that, I'm also the co-founder of DAO Under, APAC's first Web3 community for builders, participants, and new entrants, where we're planning to host ETH Down Under at the end of the year, and then also a co-founder of Brown Baddies, a South Asian focused NFT collection.
And hello everyone, my name is Hunter. I am a Melbourne-based investor with Rampersand. We have made around 30 investments in B2B SaaS, AI, and disruptive marketplaces. We as a firm have made an investment recently in a verification product that will basically form the process for assets that are going to be recorded on chain. And yeah, really looking forward to discussing the possible use cases of blockchain with the rest of the panel.
Thank you. I think it's a bit of pass the microphone up and down. Obviously, we're talking about VC and VC trends. And so one of the trends we've seen in VC over the last year is decentralisation. So what do you see as an opportunity in this space? And do you think anything is over-indexed or undervalued? Might start with Sean.
Thank you very much. I was going to say, for one that I think is undervalued, private blockchains, and I know that might be an unpopular opinion, but I think that there is really great use cases, especially in supply chain governance and with kind of enterprises where they're doing contracts. But that's kind of a use case which is not really exciting. But I think the one that I find really exciting on the public blockchain is infrastructure projects like Helium. I think there's a real opportunity for those that aren't familiar, Helium is building the first decentralized 5G network. And so you basically, the tokenomics are such that you get paid for setting up a part of the network where it's not currently there, like in a proof of coverage model. And I think that's really exciting when we can kind of start disrupting like large incumbents in infrastructure with these kind of peer-to-peer models. And so that's what really excites me, but I'll pass it on.
Thanks, Sean. So what excites me really, it's about sort of projects or companies that can bring in the old and the new. So I think that we're in this sort of moment where we see traditional players entering the space, and also we see the lack of understanding and expertise because they're new, but we also see the lack of sort of acumen to licensing and regulatory side of things with the sort of newer innovators. So a couple of investments of my own thesis is to identify some of these game changers that are bridging the old and new world. Thank you.
Thanks. I think you make a good point in terms of, you know, the lack of acumen or even just sort of the lack of understanding. I think from a Folklore perspective, we're really keen to understand and be very thoughtful about how we play in the space. I think at the moment, what sort of seems over-indexed is really some of the onboarding solutions or some of the apps that make DeFi more accessible. It's a pretty competitive space with, you know, seemingly not too much defensibility. And so I think it's like really understanding what you need to do to build a really defensible business in this space. I think that's like core to everything as an investor. Yeah.
I agree with Arby on that point around the onboarding solutions and the wallets. I think it's a really interesting topic because ultimately you're built by UX, like it's different to Web 2 solutions where you've got proprietary data sets and you can learn from that. And I think what's important to realize is it comes down to trust. So what we're sort of really trying to work out is it going to be startups building these sort of decentralized wallets for the next sort of wave of users, or is it going to be banks? And is it going to be solutions that are built and ready-made for banks to integrate, or will they build it themselves? And I think that's a really challenging area for us as VCs at the moment. In terms of areas that I see as promising, I think one of the promises of Web3 that I personally haven't really seen come to fruition is being able to own and, I guess, do what you will with your personal data. And so I think a sort of immediate term proposition is opportunities around like reputation tracking and sort of proofs of attendance, proofs of participation. And the reason I see them as particularly valuable is there's this big problem with projects and NFT communities where you've got people participating that are speculating rather than being true participants. So I think where you can have, and you know, like it's pretty largely underexplored, but where there's opportunities to track your participation, be it through wallet transactions, be it through even real world applications via Internet of Things data, where you can actually track that participation and contribution, then people that are recruiting for whether it's DAOs or other things can actually use that to evaluate who should participate. I think Arby will probably speak to it later, but he's building out a community at the moment, and the way he can evaluate those sort of things is not necessarily that easy. So yeah, I see that as a potential promising use case.
Is it on? Yes. I might just ask a little bit of an extension to that question. So, Sean, you kind of touched on it already, but do you see the opportunities for traditional equity in private or versus public blockchains?
Yeah, it's an interesting question. And I think there's a lot of kind of projects where large corporations are trying to get into the private blockchain. And I think they're kind of not the ones to do it most of the time. Like it's a really inefficient, slow process. So I think that there's a lot of opportunity for startups to actually kind of utilize like the Hyperledger and a lot of these private blockchains to provide innovation for these companies. Just because, for example, if you look at Mursac, like a large container shipping company, they've been experimenting with a few private blockchain projects, and I don't think it's been too successful. And I think considering they have such a monopoly on the containers coming to our ports, it would be awesome if there were more startup projects offering these companies like a private kind of blockchain as a service as well. I think that there's a bit of reluctance from some of the large corporates to go to full like public blockchain projects, and I'm definitely not advocating against it. I think that's where we need to go, but I think that private blockchain is a great kind of stepping stone for a lot of these large companies who control large portions of supply chain and financial instruments as well.
Does anyone else have anything to add on that? No. All right.
So other than just the blockchain side of things, what we've seen is traditional VCs or traditional investors are also partaking in infrastructure that are backing the industry. Right? For one good example is custody. In fact, there are sort of movements in that space. Can't say too much, but that is really exciting because it's the first time we've seen that kind of level of engagement into building out infrastructure that supports the blockchain ecosystem. So not necessarily just on the blockchain side, which is really exciting, but also on the infrastructure front, which is also equally important.
Thank you, Jeff. We may move on to Web3. So a lead investor in one of Australia's biggest startup accelerators recently questioned the value of traditional venture capital funding for some of Web3 startups, warning it has the potential to hinder rather than help companies building the next generation of tech. What do you think of this statement, and do you think Web3 is a place for traditional VCs to play?
It's a really interesting question, and I know there's a lot of Twitter wars between Mark Andreessen and various CEOs of Twitter. And I think that the key thing I would say is that as VCs, it's really important to invest counter-cycle. Like, it's really easy when there's a bull market to hit up the DMs of all the founders in crypto and be like, we kind of want in on the action. But if VCs are to kind of have a role, you need to provide liquidity in the bear markets. And I think that's a really important thing for us. And at Aura, how we do that at least is have an actual thesis about what we think is going to be the future of crypto, as opposed to just kind of herd mentality and following NFTs as that becomes a bull market. And so I think it's about actually having deep-rooted conviction and investing counter-cycle. And if that's the case, well, then there might be a role. I think the others will touch on more about kind of the actual like ownership side and who owns Web3. I think that's also kind of an interesting point.
Yeah, I think this question's really, really interesting, and it sort of makes you think back to first principles about VC investment. So traditionally, firms like Sequoia might take 10, 20% of the company and sort of maintain that ownership stake. But if we're thinking about it in a decentralized manner, probably doesn't make sense to have that big an ownership stake. And so what is the right ownership stake is the next question. And I think that still needs to be fleshed out. I think Sean makes a good point about investing counter-cycle. I think one of the great benefits of VC investing is that, there's more than just the capital behind it. So crypto's done a really good job in terms of getting retail investors in at the ground floor a lot of the times. But what's sort of missing from retail investment is the operational support. So for example, at Folklore, we've got 18 people there who are able to get into the trenches for any of our startups, not just Web3, but for any of them. And the problems that plague Web3 protocols aren't unique to just them. It's like traditional business building stuff. How do you deal with user churn? How do you deal with user incentives, that sort of thing? And so, having a team behind you, having, smart money behind you counts for a lot. And I think, it's up to VCs to figure out how they play from like an ownership perspective, but I think it's pretty important for protocols to consider taking on a small amount of VC investment.
Yeah, I'd echo the rest of the panel's comments. I think that VCs aren't silly about where it's not necessarily the right place for them to play, like where you've got devs that are building a protocol that's already got a massive community around it, and essentially you'd just be sort of speculating. I think a lot of VCs have a history of trying to invest and support for a long period of time. So I think the projects and opportunities where there's certainly like plans to progressively decentralize, but where founders are also awake to the fact that they might not have worked out what that looks like and how governance will evolve. I think that's sort of more interesting to us than someone suggesting or following a whale and basically speculating on projects. So yeah.
So then just a quick hands up on who thinks that VC should play in Web3. There we go. We'll move on to Senator Bragg. So obviously I've had the pleasure of working with Senator Bragg over 2 years on his FinTech and RegTech report. And in his final report and earlier this week in Sydney, he called for prompt legislation regarding the governing of decentralised autonomous organisations, commonly known as DAOs. How do you think DAOs will evolve, and are you looking at any investments in the space?
I think me and Abhi are going to disagree on this one, but it's interesting. Like, I think there's definitely a role for DAOs for the maintaining and purchasing of assets. So like, if you look at like Constitution DAO, where people come together to try and purchase the Constitution, I think that's a really great use case. And I think there's a lot of like Beats DAO and collectives where they purchase art. And I think that's a really great use case of DAO as a community. Where Abhi's probably going to disagree with me. I don't think that we would necessarily look at DAOs for kind of traditional company building. If it's like providing a consumer product, I personally don't think it's the best like structure of organizing capital and people to come together to build something. But I'm happy to, yeah.
No, it's actually an interesting topic because one thing that people, there is this camp of like DAO should be free of regulation, but there's also the need for regulation because some of these structures just frankly aren't just as strong as a governance structures backed by the Corps Act, right? And this back to questions that if a DAO underlying structure it's backed by the Corporations Act, is it still a DAO? But that's probably a panel discussion of its own. But what is apparent is that this is what I tell a lot of VC builders is that you guys have to figure out a regulatory path and regulatory strategy, because I think it's likely that there will be more regulation and less regulation. It's moving in one linear direction, as we've seen with engagement with Senator Bragg and also the industry. So that is something to consider because frankly, moving from a unregulated structure into a regulated structure is not as easy as a lot of people think, and that might be a costly or even a devastating move if they're not ready.
Yeah, I think you sort of touch on a really good point in terms of talking to more people in the space, and I think coming up with the regulations by working with builders in the space. Like I think VCs and politicians tend to sort of go at it from like a top-down perspective rather than a bottoms-up perspective. And I think it's really important to be thoughtful, patient, and really think about what sort of regulations are required and think about what sort of implications they may have later on in terms of the future of that technology. I mean, going to Sean's point about whether they're the best form of organizing people in capital, who really knows? I think we're still really early on in the DAO life cycle, I guess. Like, for example, at DAO Under, what we've been doing is organizing people into small groups to work on projects. And we've been able to ship lots and lots of different projects. And we've been able to facilitate a lot of connections between people from one project and another, and they're able to sort of share their knowledge. And so I think that shared services model is something that's really interesting to sort of keep an eye on. But who knows if that will win in the long run? But it's something that I'm betting on. But yeah.
Yeah, I generally agree with the panel. I think that there are some use cases that are certainly interesting for us as VCs. I think we're all alive to the fact that people are looking to invest via DAOs, which is something that I think all of us have been naturally curious about. The question around would we invest in DAOs now, I think for me, we would, or for us at least, we're interested in investing in projects and companies that have aspirations to operate as DAOs, but not that claim to be DAOs from the outset. I think our issue there is that, like, I come from a legal background and I look at things like, joint and several liability and who ultimately is responsible. And I was chatting to Joni Purovich earlier in the week, who's a really great lawyer in this space, and she was talking about how if you're a VC and you're contributing and helping founders in the way that you might usually, and it's via a Discord, and then something goes awry, you can actually be the one that takes the blame and becomes responsible for that. So that's just a very candid, open, transparent issue that VCs face when looking at this sort of thing, particularly when, I guess, yeah, you have a lot of obligations and a proud history.
Thank you, and I can also echo Joni is a very knowledgeable woman in this space. So 3 years ago, the market was very skeptical on a raise involving tokens, but we've seen this market mature, and VCs are now deploying capital into token raises. In your opinion, when is it more suitable to raise in tokens versus equity?
I actually think Jeff is best poised to answer this, so I'm gonna.
Like personal preference is always equity, because that probably gives you a lot of oversight and especially governance. Like, come back to a lot of this about governance. I think most startups fail, other than founders giving up, is bad governance structure, and then it sort of implodes in a couple of years, a couple of months. So having that oversight as a VC into that control is very important for me personally, but I think that there's a diverse range of opinions on that, so I don't have too much say on the other side.
Yeah, I mean, I think it's largely thinking about why you need a token in the first place, and then if that token sale is something that warrants VC investment. I think it's really important to sort of go back and be thoughtful about how you're playing in the space. Sometimes tokens might make sense, and sometimes equity might make sense. Like, for example, if we're thinking about Oracle or index-based solutions, it doesn't really make sense to have a token there. I think it makes more sense to invest in the equity. And that's personally something that I'm pretty interested in, is maybe more the equity side. But yeah.
Yeah, I think just to echo some comments from earlier, it's kind of a matter of like how developed you are with your projects. I just think that there's certainly times where you need the versatility and you don't want to be sort of bound by something that you committed to a year ago and that might be codified. And there might be a token release in a year's time and you're just not at the stage where you'd plan to be. And that's okay. That's a massive amount of innovation in this space we expect to come from people that are not necessarily native. So we think that, investing or taking equity is really important, where you're not necessarily a degen native with an amazing network and ready to go, because the opportunity is a lot bigger than that.
I'd actually add one more point to this, I think, on the token side. And this goes back to what I was saying about VC investing being more than just capital. I think if you're sort of investing in a token, the VC has to be prepared to provide liquidity for that token and sort of maintain all the governance controls that come with that token. I think that's something that's not really thought of as a value-adding activity, but from talking to builders in the space, that's the most value-adding activity that any VC can do for a builder.
And sorry, just to chuck in like one little thing. One thing that we've noticed when we've seen kind of token versus traditional kind of term sheets is the terms, the kind of usual terms that VC likes, like anti-dilutive clauses, you just kind of can't put them in tokens. It's more just things like a vesting schedule, and it's like really scaled back. And so I think the real winners are the founders, just because tokens give better terms. But that being said, I think that there still needs to be some kind of minimum things in place, just pure governance things where the VC can kind of actually invest and they have some downside protection. But I think like at the end of the day, if it's improving terms of founders, that's kind of a win for everyone.
Before I wrap it up and thank our panelists, in one sentence or less, what does this space look like in 2 years' time? Because we don't want to get ahead of ourselves too much.
Sydney will look like Miami.
Get ready for regulation.
I honestly have no clue.
Progressively decentralized.
So please join me in thanking our wonderful panelists here today.